The Hanjin Subic Shipyard is one of the most fascinating feats in the past few years for the Philippines, not because it is the former Hanjin Subic Shipyard, nor was it because of its strategic location in Subic, but rather it is due to the fact that as soon as the former owner of this very Subic shipyard declared bankruptcy, which was Hanjin Heavy Industries, there were a number of international buyers that immediately bid to buy the shipyard. Indeed, the Hanjin Subic Shipyard used to house the former Hanjin Heavy Industries and Construction. It was once heralded as one of the most successful and largest ever foreign investments made in the Philippines. At its peak around 2016, it was employing more than 35,000 people, a massive number of employees, all crammed in a 300-hectare industrial zone. By 2019, Hanjin Heavy Industries would declare bankruptcy and disappear from the shipyard industry of the Philippines. Their bankruptcy, however, has led to many speculations. What future will this shipyard hold, as some have asked? It was, after all, loved by local and international shipping communities. Quite a number of major companies relied on this shipyard's products and services. Well, as the future has already occurred, the Hanjin Subic Shipyard has taken its place. It, however, took years before it transitioned from its previous owner to the current one. But we will discuss this further on, starting with the exit of Hanjin Heavy Industries. When Hanjin Heavy Industries Philippines filed for voluntary rehabilitation under Republic Act 10-142, many immediate buyers came out, buyers that would join this so-called bidding process. The value of the slated shipyard, however, was unknown. Just what value would this now defunct facility be was the question in this bidding process. Will the Chinese firm, as speculated by many industries and media experts, be the buyer? Chinese companies have, after all, become a participant in the growing economy of the Philippines. They have participated in Dito Telecommunications through a company known as China Telecom, to many infrastructure programs and a long list of myriad opportunities. Furthermore, China has a strategic reason to purchase this shipyard. It is stationed in an important location in the country, and as known throughout the world, they are a big buyer of seaports. However, many speculations of whether the buyer would come from China had fallen through. A bid launched by Australian shipyard company Austal emerged to be the leading bidder, alongside American company Cerberus Capital Management. The speculation thereon had dropped the idea that another Asian company would swoop in to participate in the former Hanjin Subic Shipyard. This also meant that the shipyard could now fall back to Western hands, as it was also known previously that the Subic Freeport Zone used to house the U.S. military before the 21st century. And as time showed, the Australian giant Austal would drop their interest in the shipyard, leaving the sole bidder to the American company. The Subic Bay Metropolitan Authority, the governing board that handles the bay's economic zone, had awarded the shipyard to Cerberus Capital Management. A daunting feat that made headlines in media reports, stating that the Americans who once left the bay in the 1990s are now once again returning. Although not for their military interests, but for commercial purposes. The bid that Cerberus Capital launched to purchase the Subic shipyard, on the other hand, was a measly $300 million US. The word that we used was measly because the shipyard had assets worth more than $2 billion. Yes, that is right. They had acquired a shipyard that had massive amounts of assets for a small price. The details, however, on how this happened were not really published publicly, and this is just speculation. Speculation that we found in connection to Hanjin's previous assets during the bankruptcy and the buyout price. And even if we disregard the figure of $2 billion assets, when Hanjin Heavy Industries was even using the shipyard itself, they were still reaping massive benefits. They reported billions of dollars in revenue, which should mean that the potential in operating this shipyard was massive to them. And so will it be for Cerberus Capital Management. We should also not forget about the fact that Hanjin Heavy Industries, from the years they were operating in the shipyard, has helped educate many workers. This means that Cerberus Capital Management would not find it difficult to find talent to work for their operations. These previous and historically proven records of pushing profit alongside an already talented workforce should, in essence, prove that the purchase was seemingly small. However, as noted earlier, there may be other details that we are missing out on, other than the fact that it was purchased for only $300 million, and these $300 million, although cited as purchased, was actually used to to settle the debts owed by the former Hanjin Heavy Industries. Moving on, another question that most people would want to know is who is Cerberus Capital Management and what are they doing with the Subic Shipyard right now? Cerberus Capital Management is probably not a company you would expect. No, they are not a heavy industries company, neither are they a company operating in the industries of shipping, logistics, engineering, or whatever there is out there. They are a private equity company that deals with distressed investing. They are, in simpler terms, a company that acquires another company, regardless of their industry. It could be healthcare, government services, telecommunications, or whatever there is. And after acquiring that company, they would only hold it for an average of about 5 years. They are, as proven by their historical records, ones that profit from distressed assets, such as the Subic Shipyard. And soon after, they fix it up, probably put a managing company there, and by the time it reaches its peak value, they sell it immediately. And Cerberus Capital Management itself is a massive company. They have, as of the time of this writing, over $55 billion in assets under management. The final question is, what are they doing with it now? Are they using it to once again make ships? Well, it was reported that it is going to be a multi-use facility. According to the Subic Bay Metropolitan Authority, there will be 4 Dutch-affiliated companies of Cerberus Capital Management that will take charge. Soon after they acquired the former Hanjin Shipyard, they immediately renamed it the Agila Subic Shipyard. And according to the same government authority, the Dutch-led investments, which are all combined under the Agila Subic banner, totals about 18.4 billion pesos. These are divided into 4 separate entities, known as the Agila South Incorporated, which pledged 10.74 billion pesos for the development, operation, and subleasing of the Subic Shipyard, followed by Agila MV Naval Incorporated, also for the same purpose as the mentioned company, but pledging only 6.28 billion pesos, and then 1.11 billion pesos pledged by Agila Subic Compass Incorporated for maintenance and management of real property. Finally, 313 million pesos by Agila Subic TC Incorporated for the acquisition and management of subleases of housing units and others. In simpler terms, this money will be coming from Dutch companies, and they have set up these 4, as far as we know, entities established to have their own respective purposes in the area. So far as well, there are already many tenants reported by the media that have occupied certain areas of the shipyard. First, it was reported that American defense contractor Vectrus would move in. The Philippine Navy would also use the northern yard, and it was also reported that the U.S. military themselves would also acquire a portion of it. It is a mixed-use facility indeed. The private company Vectrus had even reported that they will rehire those former employees of Hanjin, bolstering up those who have lost their jobs and are now back again. The time span of the shipyard, however, is part of the former lease signed by Hanjin Heavy Industries. The 50-year lease would go to the hands of Cerberus Capital Management. But anyway, the rise and fall of the Hanjin Subic Shipyard and turning it into the hands of American and Dutch-led firms have proven 2 particular concepts: trust and opportunity. The fact of the matter is, while one company can go bankrupt in the Philippines, we might be sure that there will be a buyer interested in taking advantage of the opportunity left out. These can only happen if there is trust. Trust in the government, trust in the concept that the shipyard is well intact, and trust that there is stability in the area. Opportunity, on the other hand, is understated. The only way an investor will ever pour out $300 million in an asset is if they see an opportunity. Therefore, we cannot deny the fact that this shipyard does hold a considerable number of opportunities, as proven to its interested buyers. Who knows what the future holds from here on out? Let us know down below. Do you think that the future of this new Agila Subic Shipyard will be a boom or a boon for the Philippine economy? Let us know down below. Thanks for watching.